Thanks, everybody, for showing up for this meeting. First and foremost, we'll have a roll call. Chairman Don Castor's present. Councillor Prince?
Present.
Councillor George McDonald?
Present.
Councillor Brookswager?
Present.
Citizen appointee Ian McLean? Citizen appointee Rakesh Koshar?
Present.
Thank you. First on the agenda, number one, approval of minutes.
So move. George. Second.
Okay, moved in second. All in favor?
Aye.
Aye.
Thank you.
That's two anyway.
Approval of agenda, motion required.
So move. Second.
Moved by Councillor Prince, second by Councillor George McDonald. All in favor?
Aye.
Aye.
Thank you. Now we'll have Jennifer make her presentation. Right.
Thank you, Chair. Good afternoon, everybody. I'm just going to share.
Good afternoon.
Afternoon. Just let me share my screen here. Everybody see that?
Yes.
Okay, perfect. Thank you. So I'm pleased to present to you today highlights from CBRM's March 31st, 2020 fiscal year end. How's it going to switch slides for me? There we go. So we, of course, had a very busy year, particularly on the capital project side, completing $46 million in capital projects completed between both the municipality and the water utility for 2019-20. And of course, those projects include several significant pieces of community infrastructure, such as the Second Berth in Sydney, the Miners Forum, and the Glace Bay Police Station. And we also increased and made significant investments in our transit fleet and expanded transit service in response to increased demand, which we'll get into later. And also, thanks to the doubling of the federal gas tax, CBRM was able to complete over $10 million in roads and sidewalk rehabilitation this year. The viability study conducted by Grant Thornton was completed and produced over approximately 20 recommendations on how the municipality can become sustainable through both policy and operational improvements, as well as strategic or economic initiatives. And many of those recommendations are already in the process of being explored or developed or implemented today. The final of CBRM's 5 collective agreements was settled during the year outside of binding arbitration, which is very significant for us. And the deficit of the water utility is good news. The deficit has been officially eliminated. That was part of the water rate increase that was approved by the UIRB back in 2017. And one of the intents of that water rate increase was to eliminate that deficit. And that has been, we have seen that deficit eliminated as of March 31st, which is great news for ratepayers. And of course, I'd be remiss if I didn't mention the implications of the coronavirus that has really taken the world by storm and has certainly significantly impacted our region, and really didn't hit here until March 2020, but specifically the last 2 weeks of our fiscal year. It caused the cancellation of our events, our programming, it closed our facilities and resulted in an immediate overhaul of how staff deliver municipal services amid a pandemic. And of course, we did, the result was a loss of revenues in the last month of the year, as well as increased costs associated with pandemic response. And that created a financial burden that we didn't expect and we didn't budget for. And those prevention and recovery measures continue. CBRM did manage, however, to squeak by with an operating surplus for municipal tax purposes of $11,940. And the water utility operating fund is reporting a surplus of just under $2.8 million. So these are the financial results for CBRM's operating fund presented in the format that council is most familiar with. So as you can see, revenues exceeded budget by $720,000. Expenditures also exceeded budget by about $708,000, which is how we arrive at the surplus of $11,940. So I will provide explanations on the larger variances in the next couple of slides. So revenues from taxes are CBRM's most significant revenue stream. And for 2019-20, tax revenues actually came in 868,000 greater than budget. And the variance is further dissected in the top table of the slide. So as you can see, the majority of the increases with respect to residential tax revenue, and that's the increase is primarily due to two conditions. First, the municipal service agreement for member 2 was renegotiated during the year, but it was renegotiated after the budget was approved. And that actually increased our residential revenues over and above what was budgeted. Also, appeals and assessment adjustments were less than anticipated as well. The second contributing factor, deed transfer tax. Deed transfer tax revenues were also higher than budgeted due to increased housing market activity, which we're still experiencing now, as well as some high value commercial and residential sales. Transit is another area of revenues that exceeded budget that I'll bring to your attention, and that's simply a reflection of our increased ridership. And that increased ridership is largely due to the high incremental enrollment of international students at CBU that use the service and purchase bus passes. Transit expenses, you'll see, are also up significantly as a result, and you'll see that in the coming slides. Pretty much offsets the increase in revenue that we realized. Unfortunately, recreation and cultural service programs, that's basically our arenas budgets, revenues came in less than budgeted. There were no significant major events such as concerts during the year. There was one planned for September, but that was actually canceled, not due to the pandemic, but actually due to low ticket sales. We also have the pandemic to blame for lost revenue, as I mentioned, for March break. And from March break onward, that's the peak revenue generating period for our facilities, particularly Center 200. There's a significant amount of hockey tournaments like the Vince Ryan, the Barry Lush tournament. The Q League has their playoffs that overlap from March into April, which sees a significant increase in volume of bums in the seat and canteen purchases and concession revenues. And also minor hockey is at a peak during that time as well. So when I actually compared revenues for March 2020 to March 2019, the estimated lost revenue just for that 2-week period alone is estimated at least $200,000. And that's lost this year because of the forced closure of our facilities. The final revenue item to note is our extraordinary revenue or disaster recovery. Hurricane Dorian caused significant damage throughout the province. However, CBRM was very fortunate that the storm's impact here was minimal in comparison to other areas of the province. In total, we did incur approximately $165,000 in damages. However, $122,991 was eligible to be submitted for recovery through the disaster financial assistance arrangements. So while that's listed as an extraordinary revenue item, it's unfortunately becoming somewhat ordinary. This is the second time in a third-year period that we had extraordinary revenue as a line item in our financial statements. With respect to expenditures, I've highlighted variances in 3 key areas here. Police services expenses were actually less than budgeted by over $1 million due to 3 main reasons. First is staffing. There were a number of staffing vacancies during the year, in addition to careful police overtime and personnel management. The member 2 policing agreement was renegotiated to fully fund 6 officers. However, at the time that the budget was developed, we had budgeted to assume 5, which was consistent with the arrangement that was in place in 2018-19. And also we had cost reimbursement for training through the Provincial Drug Recognition Program. Engineering and public works is another key area that saw significant variance from budget this year. And there's again, several reasons for that variance. Solid waste, the global markets continue to negatively impact our operating results because of the lack of market for recycled materials. That impact has resulted in about a $275,000 loss to our solid waste operations. Under public works, as you know, we experienced a very long winter. Our first snowstorm hit in November, and we experienced frequent back-to-back storm systems throughout the year. And this resulted in increased road and sidewalk maintenance costs, salt, road clearing, et cetera, to the tune of an extra $750,000. And as previously mentioned, the damages sustained by Dorian account for approximately $165,000 in costs. And those were costs substantially for the removal of downed trees and clearing debris from roads and sidewalks. transit costs associated with fuel and fleet maintenance and staffing in response to the demand added approximately $600,000 to transit expenditures. And that, as I mentioned, is offset by the increase that we saw in transit revenue on the previous slide. Facilities expenses were over budget by approximately $600,000. We experienced higher than expected energy costs and heating costs for the Miners Forum while under construction, as well as CBU and the Centennial Arenas. And we also incurred some significant costs with respect to repairing and replacing the handrails at Center 200 for patron safety. And we also had some issues with the aging boilers and chillers that required emergency repair in order to sustain operations. All that being said, though, we did see some general areas of savings and reductions. Areas of training, education, travel, conferences, and meetings were $400,000 less than budgeted. Advertising, promotion, and community events were under budget by $175,000. And that's partly due to the fact that our March break programming and recreation had to be canceled because of the pandemic. And also temporary staff vacancies also contributed to some positive budget variances. Moving on to capital funding and debt. As I mentioned earlier, CBRM's completed capital projects for the year was in excess of $42 million, over half of which relates to the investments made in the Sydney Cruise berth and other community facilities. And as mentioned earlier, the doubling of the gas tax in 2019-20 allowed the municipality to invest an additional $6.8 million to rehabilitate local roads, sidewalks, and other green projects with no associated borrowing. So they were fully funded projects. The left table on this slide shows our capital program by category and includes actual costs, the associated funding received, and the required and budgeted borrowing for the year. So as you can see, required borrowing for 2019-20 is $11.1 million, which is actually $1 million more than budgeted. And that's due to a very simple explanation. The project costs for the second berth and the Miners Forum carried over multiple fiscal years. And due to the timing of the project work, some costs and the associated borrowing simply shifted from one fiscal year to the next. So these were both tendered projects and both came in on budget. It was merely the timing of how much of the costs were incurred in previous years versus the current year. So as you can see on the table to the right-hand side, which is our debt continuity, when you compare the debt over the span of the 2-year construction period, there is in fact an overall decrease in debt of approximately $240,000. So CBRM's total debt as of March 31st, 2020 is $71,602,000. So on to the water utility. So as mentioned in 2017, the UARB approved the water utilities application for water rate increases. The new rates have been phased in since July of 2017, and the last of the rate increases came into effect April 1st of 2019. So the increase in the water utility revenue reported in the March 31st, 2020 financial statements is a direct result of that increase. So as you can see in the chart, expenditures are comparable to 2018-19 with variances primarily due to the inflationary increases in chemical costs for water treatment. All the other expenses are relatively consistent with the previous year. Also, non-operating revenue and expenses remain relatively unchanged, and with year-end results reporting a current year surplus of just under $2.8 million. So the rate increase implemented in 2017 was to address increased operating costs, fund the project capital program, as well as adjust for the loss of several commercial customers. But it also included a provision to address the accumulated deficit, which peaked at $5.6 million in 2017. As mentioned in my opening statements, as of year end, the water utility operating deficit is completely eliminated. And we actually have a net accumulated surplus of $1,075,000. And the progression of that deficit repayment is shown in this table to the left-hand side of the slide. And for water capital, the water utility has not increased its debt over the last number of years. And with capital funded by way of infrastructure funding programs like the Clean Water Wastewater Program and with operating funds. So during 2019-20, capital projects for the water utility totaled $3.7 million, and overall debt of the utility currently sits at $29 million and is reduced by $3.5 million annually. So here's our summary of our financial condition index. And these indicators were developed by the province in collaboration with the NSFM, as well as the Association of Municipal Administrators. And they're basically used to identify trends and flag risk areas that may require attention by the municipality. So this chart, as you can see, outlines the results for the last 4 years. Mind you, I will qualify that 2019-20 indicators, they're currently in draft because the province has yet to review and approve them, but I don't expect any significant changes from what's presented here and what I anticipate the final results to be. So as you can see, the 2019-20 draft results are in fact consistent with last year's and continue to show improvement in areas of liquidity and debt servicing. The reserve indicators have also improved over prior year, however, do remain at the high risk threshold. The indicator fund collectible taxes remains consistent and at a moderate risk level, while the remaining 8 indicators fall within the low risk threshold. I am going to talk about a few of them in more detail though. Reliance on government transfer shows a continuous improvement over the 4 years. I have that at the bottom of the slide. It shows that we're becoming less reliant on government transfers. That result is strictly based on the mathematical formula that's shown in this slide. It doesn't evaluate the adequacy of the transfer, and it doesn't evaluate the appropriateness of our service levels or the level of our expenditures for a municipality of our size. So in our case, our government transfers stay exactly the same, with municipal capacity grants frozen since 2014 and 15. The indicator is going to improve even with the slightest increase in revenue. So as you know, with most of our revenues are generated by way of taxes, primarily residential taxes, which growth is generally limited to CPI on capped assessment. And we know through our budget exercises that revenue growth does not keep pace with the rate of expenditure growth. So while the indicator shows a calculated improvement, it's really not indicative of the true need for financial assistance. Uncollectible taxes has been a key focus over the last several years, and we have seen some improvements. Collections were really strong during the year up until we hit the pandemic wall, and the number of accounts settled outside of tax sale procedures were at an all-time high. Unfortunately, due to the pandemic, the closure of our Citizen Service Center, the year-end push to distribute the final round of tax arrears notices, and our year-end tax sale were all put on hold or canceled, and undoubtedly impacted our results. And while the indicator results show a slight slip in uncollected taxes compared to last year, this isn't quite accurate. As you know, the history of the Nova Scotia Health Authority accounts has demonstrated how the timing of their payments impacts this indicator, as it represents a significant percentage of our outstanding receivables if remained unpaid. The Health Authority receivable was outstanding as of March 31st, however, was collected in early April. If the indicator is normalized for the Health Authority accounts, the results would actually show a 0.4% improvement in the indicator for 1920, which is excellent news. And with respect to reserves, we do continue to fall in the high risk category and by a significant margin for our reserve indicators. I have made note in the margins there what those thresholds are. So to fall within a moderate risk for operating reserves, we're looking at a 10% outcome. To be in the low risk, it's 20. For the combined reserves, we're looking at 30 for moderate risk and 40% for low risk. So we fall well below the provincial thresholds to show a low risk area in these indicators. So while operating reserve has improved over last year, and that's due to transfers from our trust, the annual appropriation to election reserve, and the small operating surplus realized for this year. However, we will undoubtedly see a decrease next year because of the pandemic and the planned use of operating reserve funds to balance our operating budget shortfall. We'll also continue to explore and implement strategies as recommended in the viability study as a means to generate new revenues and grow our tax base. However, with an FCI of 7.8 for operating reserves compared to the provincial medium risk threshold of 10, we're going to continue to rate in the high risk category for this indicator for several years to come, I'm sure. And the combined reserves include both capital and operating reserves as they relate to total operating expenses, which for the purposes of the combined reserve calculation includes depreciation expense. CBRM completed 42 million in capital projects, as I mentioned earlier, which is the largest capital budget in CBRM in over a decade, and taking full advantage of the doubling of the gas tax for roadwork, sidewalks, and other stormwater projects. Not all intended projects were able to be completed, however, due to early snowfall, which shortened the roadwork season. While the indicator demonstrates improvement in this area from last year, it is due to the banking of unused gas tax, which has been allocated for use in subsequent years' capital budget. So we don't bank that money and save it for a rainy day. We're constantly working to use as much funds as possible to invest in our infrastructure. We're doing the very best we can with the limited funds that we have. However, until our tax base grows and our immediate infrastructure needs are addressed, it's unlikely that we're going to see improvements in this indicator in the near future either. CBRM's internal financial statements are budgeted and managed and reported by department, but for financial reporting purposes, CBRM is required to report revenues by significant source and expenditures by government function. So our internal financial statements are simply rearranged into the respective government function categories, which are listed here. Most significant rearrangement, however, is how our fiscal expenditures and conditional transfers are assigned, and those are each marked with a star. So if you look under general government services, that's where we fit allowance for uncollectible taxes and other receivables. Our assessment services are included in there. Education services are given their own category. That's where our provincial transfers for education are. And same with housing authority has their own category. And as you can see, anything with a star is those are the respective budget line items in fiscal and provincial transfers that are slotted into the corresponding category to which they relate. So this slide details the transition of our internal annual surplus to the deficit or change in fund balance that's reported under PSAB standards in our audited statements. This is where it can get a little bit confusing. So first, we're required to transfer our internal surplus to operating reserves. So we effectively start at net zero in calculating surplus or deficit under PSAB on an annual basis. The remaining reconciling items are public sector accounting board adjustments for liabilities that are not funded or rated for, and therefore they do not form part of our internal statements. We aren't in any way penalized for not funding or rating for them. They're not unique to CBRM. They're common adjustments for all municipalities in Nova Scotia. In fact, they are even excluded from the calculations of our FCIs and any other analysis performed by the province. They are liabilities that do have to be recorded under PSAB standards because they meet the definition of a liability, and the statements would not be in compliance with GAAP if they weren't recorded. So there are basically three reconciling items. The first is the accrual of estimated costs associated with future obligations for contaminated sites. So for CBRM, that's our retired landfills. The landfill closure liability estimate was increased to reflect current environmental regulations and inflationary adjustments. And so the adjustment to increase that liability this year was $659,015. So the total liability now sits at $54,569,015. And this adjustment is included in the environmental health services expenses in the audited statement. Interest accrued on long-term debt occurs from the time of the last debenture payment and the financial statement date, and that's been adjusted to actual, resulting in a reduction in expenses of $58,717. So that interest accrual went from $970,000 last year to $911,000 this year. That adjustment is allocated amongst the respective government function expenses that the borrowing relates to. And finally, we're required to accrue the full value of sick and vacation obligations as of year end. The total adjustment of these liabilities for 2019-20 is just over $1 million. And the total unfunded liability for sick accrual is $458,889. And the vacation liability is $4,872,211. We budget for what we anticipate to pay out in sick and vacation liability on an annual basis. Again, these adjustments are just to bring our year-end audited statements in compliance with PSAB standards. Our consolidated statements represent the totals of all of our reportable funds for the CBRM. So the CBRM has 6 separate funds and plus the 100% interest in the Port of Sydney Development Corporation. So the sum of all of these funds as reported under PSAB standards is reported in the audited consolidated statement of financial position and financial activities on pages 4 and 5 of the audited statements, which if you're looking at your agenda package is on pages 25 and 26. And there's actually separate schedules for each fund in the above table, and they're included in the audited statement starting on page 25. So that pretty well wraps up my presentation. It does go without saying that preparing audit files and executing audit procedures looks a little bit different during a pandemic. And while a large portion of audited documents are prepared and transferred electronically, there's simply certain things that can't be done remotely, and teams are required to be on site. I would like to extend my appreciation to Darren Chesson and the audit team of M&P for their versatility in the execution of their audit work to fit public health requirements, and also for respecting CBRM's COVID-19 protocols while in our municipal buildings. I put this quote on here. I felt it so fitting for us passionate bean counters, as Darren Bruchschweiger lovingly labeled us just before this meeting. Even if it's a quote from a scientist and it reads, "What counts can't always be counted, and what can be counted doesn't always count." And what simply can't be counted here are the intangibles of staff effort, commitment, dedication, and work ethic. And this year end was particularly challenging given the pandemic, with staff were abruptly thrust into working from home on staggered work schedules, juggling a multitude of both work and family responsibilities, including childcare and other family responsibilities, and all the while trying to adjust their approach during a time of constant change and, quite frankly, a time of heightened anxiety for everyone. And we have truly amazing staff, and everyone deserves praise for stepping up. But since I have the mic right now and this is audit committee, I get the opportunity to brag about our own finance staff. And there are many hands involved in various elements of our financial reporting processes throughout the year, including management, financial services clerks, and support staff throughout the entire organization. But the reality is the bulk of the responsibility for year-end reporting rests on our accounting team. And I would not have this report before you today if not for the tremendous efforts of our manager of finance, Adam, who is also on the call today, our accounting staff, Carol Ann, Daria, Warren, Amanda, Raylene, Nadine, and Wendy, whose efforts ensured the day-to-day still got done, year-end responsibilities were fulfilled, and any auditor inquiries were addressed promptly. Thank you very much to everyone. That concludes my presentation, and I'd be happy to answer any questions before Darren presents the M&P audit findings report.
Jennifer, thank you very much for that report. As she has stated, is there any questions from any of our committee members?
Okay, Ivan, where do I hit here?
Okay, Darren Bruchschweiger.
Thank you very much, Jennifer, for this report. And you're making it more simple every year with the extra captions you have there, and it's very much appreciated by all of us. And I want to, first of all, echo your comments to your staff on the excellent job that you're doing, and especially yourself, Jennifer. You guys had some pretty serious times this year with COVID, and like all staff of CBRM, it's been a little bit of a more difficult challenge for everybody to perform the work that had to be done, but hats off to you all. Jennifer, if I could, I want to just touch again, please, on the education, housing, and corrections. Total cost for that, Jennifer, was roughly 20 million, correct?
Yep, it's in and around there.
Okay, so of a person's tax rate in CBRM now, is that still around 42 cents on the $100?
It's closer to 40.
Closer to 40 now, okay.
Mm-hmm.
So for those three particular services in CBRM that we have absolutely nothing, no say whatsoever, it's 40 cents of the rate. For example, here in Dominion, it's $2.07. 40 cents of that we collect from the ratepayer and we send directly to Halifax, correct?
Yes.
Okay, thanks very much, Jennifer, on that. The other thing, I guess, as I look at is this landfill liability. I'm somewhat amazed at the growth just in this past year of, was it close to 600,000 or what have you. I'm just wondering if there's been any discussions at that level with the provincial or federal level about this liability, Jennifer, on some kind of plan that they may be able to help us address these issues. Have there been any to date that you know of?
I believe I know our solid waste manager, Francis Campbell, is in frequent contact with provincial officials on this. CBRM, we do complete reports annually to Nova Scotia Environment and complete recommended tasks to mitigate any identified environmental concerns. To date, those have been minimal. The regulator hasn't required CBRM to move forward with anything other than continued monitoring, and the costs of that are budgeted for annually in our operations. So right now, the increase is basically CPI on the accrued liability. It's just unfortunately our liability is 54 million, so even 1% of that is quite significant.
Okay. Last thing for me, Jennifer, just in the police, you mentioned it there, you brought up, or we actually, I guess we see a surplus. The drug recognition training cost, how much did that part of it end up to be, Jennifer, if I can ask? The breakdown.
In total, we recovered $113,000 in training costs. Some of that is cannabis, some of that is other drug recognition training.
Okay.
Yeah.
Right. So when I see police overtime, right, I guess I'm trying to understand the variance, why it's so different there between our budget and what the actuals were. Why is that highlighted? If I can make, I just having a hard time understanding that.
Yeah, so maybe it wasn't communicated clearly in the presentation. I apologize. So we budget a certain amount for wages, for training, for vehicle maintenance, fuel, major investigations, etc.
Right.
So overall, police services came in under budget by about $1.2 million.
Okay, so for me, I guess I'm somewhat surprised at that, considering I figured there would be much more overtime with the number of officers that we had off. So we must be running short. I really, that's really pretty good. I can't believe we're there.
Yeah, I wouldn't defend that that's a healthy number of officers to work with by any means.
No,
I know our acting chief of police is carefully monitoring personnel and trying to manage overtime to the best of his ability, given the complement that he has on hand on any given day.
Right.
I will say that overtime is up. However, there is an offset to that in that there are certain personnel who are off on workers' compensation who we aren't paying a salary for. They're being paid through workers' compensation, but we have those positions budgeted for. So it's give and take within the budget. The end result ended up being a surplus for us this year.
I'll stop for now and let my colleagues ask questions. Thank you. Thank you.
If there's any other questions, maybe the individual could raise their hand, please. You see them, Joe? Other questions for Jennifer? Hold it, excuse me. Go ahead.
I just, Jennifer, thanks for that detailed presentation. I noticed that we had an increase in revenue from transit at about 595,000. What was the increase in actual capacity of seats in our region over the last year?
Well, you're asking me a difficult one. I'm not heavily involved in transit operations. I wish our Director of Engineering and Public Works, Wayne McDonald, was on the line. I will say, however, that the majority of the increase is directly attributed to the increase in runs and capacity for Cape Breton University. As you can, if I look at the revenues, our revenues are increased by $600,000 directly from student passes. So that tells me that the increase in revenue and the capacity is strictly with pertaining to the extra Sunday service runs that we were doing, as well as the increased frequency of runs to and from CBU.
Just another question. I didn't quite see the increase in expenditure as far as transit was concerned. I was just trying to figure out what the ROI there was. But the financial condition index, I thought that was somewhat telling. I know the actuals are below the threshold, and you did heighten the risk there. Is that information being captured in our enterprise risk management report, or that particular chart?
Really, the only entity that uses this particular financial report card is the province, who is essentially our parent company, if you will. So These indicators are published on an annual basis on the website and it is available to the public on a regular basis. I'm not sure what they do about it from here. I know it's used for evaluating whether or not a debt affordability model has to be, that exercise has to be engaged through the municipality. For example, if they're looking to borrow for significant capital projects, they'll go to their debt service cost indicator to see whether they have the capacity to take on certain projects and additional debt. It is mostly used at the provincial level to assess a municipality's financial health for moving forward with certain programs and projects, to defend, hopefully in the future, a better or improved government transfer model for the municipal capacity grant. But for right now, these indicators were developed and fine-tuned probably 3 or 4 years ago. But outside of doing the calculations every year, I'm not sure what, honestly, the province does with them.
Can I comment on that, Mr. Chair?
Yes. Go ahead.
So originally, the indicators were produced and it was going to be a trigger that if any municipality scored over 3, if we were at risk for more than 3, the province would come in and they would do something similar to what they did for us, the viability study. That never happened. So when we were over 3, we insisted that we have a viability study, but that was the original intent of those indicators, that the province would step in at some point to do a report or a viability study on the municipality if they scored in the red for more than 3.
Okay, thank you.
Thank you, Rakesh.
I say a word, Ivan.
Go, you're on the floor, George.
Now, before I drive into the sunset, I guess I just want to commend Jennifer and her staff. As Darren mentioned, just amazes me when she does these presentations, how like I say, how they're perfect always and very easy to understand usually. So again, I want to just make a comment of how grateful I know I've been the last couple of years, especially under Jennifer's, I guess, tutelage. But a great job. And again, I know, as she mentioned, her staff, of course, she's got a fine staff there, and I really want to commend her and thank her for all her efforts. My only question, I guess, and it sort of touches on what Darren had mentioned, when we had the province in last year to see if CBRM was really feasible, and we're doing the viability study, one of the things they zeroed in on first, of course, was police. And I know I'm on the police commission. We're actually meeting next week again with the province as they do a sort of I guess, an examination of our police service. But again, according to the budget now, the police service is fine. But I know we had talked during the year about overtime, and Darren kind of alluded to that. But I'm glad to see the budget is fine, as Jennifer mentioned. And again, we're always questioning the amount of money spent on overtime and so on. But she's kind of explained that on Darren's question. So I thank her for that. So I'm not sure if she can say anything else. But I just want to say before we leave, it's probably our last meeting as an audit committee as far as myself and Clarence go. And I'm just quite impressed, as always, with both Darren, again, and his company, and also with Jennifer and her entire staff. So I want to just thank them both very much.
Thank you, Councillor. Chair, if I could just comment on the status of the police study. It is ongoing. Actually, Marie is the contact person, liaison between the municipality and the consultant that's doing the study. We have been back and forth and exchanging various elements of information that they have requested, and I know they are planning on coming on site and doing a site visit in accordance with, of course, pandemic rules and self-isolation requirements and whatnot. So that is ongoing and is progressing well.
Thank you. Any other questions? Okay, hearing none, we'll have the presentation by Darren Chesson.
Okay, thank you very much. So I'm going to share my screen now, which is just a continuation of your report, but I'm going to take you to the focus of what I'd like to talk about, and that's with respect to the audit. But before we get started, I do want to first off thank Jennifer and Adam and the staff for all the help obviously we get in the run of the audit, particularly this year in providing the flexibility in dealing with the challenges that we faced with COVID-19. And to say it was challenging would be probably an understatement for your staff at certain times. And we recognize that, and we want to sincerely thank all of the staff involved and in the whole process. The audit was very well prepared. The financial statements were very well done. There were no adjustments proposed by us, with the exception of the ones that we'll talk about in a few moments that were not made. But that being said, we just think it was a very good process, and want to thank your staff again. Jennifer has provided what I think is an excellent summary of what you see in your financial statements. It provided the bridge between what you see regularly and what you're preparing and providing in your external financial statements. So what I'd like to do is to just bring you to your financial statements, which start on page 20. But what you see in front of me here is the auditor's report. And this is what we will attach to your financial statements once the financial statements have been approved by the council, which is expected to happen later today. And this is what we call an unmodified auditor's report, which in the second paragraph, you will see it says, in our opinion, the financial statements present fairly in all material respects the financial position of the municipality at March 31st, 2020. Results in financial performance and cash flows for the year then ended in accordance with Canadian public sector accounting standards. So these comply with the standards that are required for you to follow, and we have found no issues with respect to that. The financial statements that you then see following through the next number of pages presents to you the consolidated results that Jennifer's talked about. Also provide you with the notes to your financial statements, which disclose the policies that are used to prepare your numbers, as well as providing further supporting information on the balances, such as your receivables, payables, long-term debt, etc. It also provides schedules of the funds relating to general operating and capital, water operating and capital, your reserves, and the Port of Sydney Development Corporation. The next set of financial statements that are in your package is the water financial statements. These statements are prepared on a different basis of accounting. So in the second paragraph, in our opinion, it says that, in our opinion, these financial statements present fairly in all material respects the financial position of the water utility at March 31st, 2020. Results of its financial performance and cash flows for the year then ended in accordance with the Accounting and Reporting Handbook for Water Utilities in Nova Scotia. So there's just some different rules that have to be followed within your water reporting requirements. And these financial statements, our opinion is that you are following the proper procedure and rules in order to prepare a set of water statements in Nova Scotia. These financial statements, they start on page 53 in your package. The report that I just went over is on page 56, and it does prepare both the water operating fund, the capital fund, and the reserve fund of the water utility, along with the notes of the policies and detail. The audit findings is what I'd like to focus on here. As I mentioned, Jennifer did a very good job explaining the highlights of what's in the financial statements. And what we were asked to do was to prepare or to perform an audit engagement of those financial statements, both sets. I'm covering off both sets of financial statements in this report, as the findings are equal to both. So the status of the audit is that we have substantially completed the audits. A couple things left, housekeeping items that need to happen before the financial statements can be released in final. We will be providing the representation letter to Jennifer to prepare, sign, and send back to us. We are required to look at subsequent events. which means we are required to look at transactions that happened up to the date of the auditor's report. And as I mentioned, today is expected to be that day, to ensure nothing's happened since the end of the year up to the date of reporting that would be required to be either recorded or disclosed in your numbers. So we've updated those events to, I believe, up until last week. And we're going through that process right now. So we're well along there and don't anticipate any problems. And finally, it would be the, rather than audit committee's review, it would be council's review and approval of the financial statements. That triggers all of the events happening and determines the date of the financial statements. So we expect all of this to be done September 28th, so today. Wrap up those last couple of procedures today and tomorrow, and we'll be in the position to provide you with a final financial statement with our auditor's report attached for your filing deadline of September 30th. As far as the audit is concerned, we did meet with you to go over what our plan was, and we did not have any deviations from what we expected to do with you, knowing full well that there were going to be some challenges with COVID. Materiality for the municipality is $1,890,000, and for the water utility is $548,000. We are required under our standards to consider fraud, illegal acts, and compliance with laws and regulations and report to you whether we find anything. And I'm pleased to report that there was nothing found that is required to be brought to your attention. Going concern is always reviewed on an annual basis, and there's no events that we consider cast any doubt as to the municipality's ability to continue as a going concern. There are no changes to the accounting policies that are disclosed in the note to the financial statements. As I mentioned, statements have been prepared on the same rules and regulations that have been in the past. Disclosures are required for various items, and one of the new disclosures that you will see this year is relating to COVID-19, and that is included in pretty much all of the audited statements that we do at this point. And the note simply highlights the fact that there's a lot of unknowns right now, and the impacts to your revenue and your expenses are largely unknown going into the future. So it's just highlighting that fact that there are some unknown items that will happen subsequent to year end. The significant deficiencies in internal control, we will present the management letter to you, which identifies a couple of management letter points, and we will talk to that in just a few moments. There were no matters arising through our discussions with management. And again, I want to thank the staff for all of the time that they give us for the audit and doing it in a very timely basis. We very much appreciate that. We would like to also confirm that we're independent with the municipality. We do that on an annual basis, and we've done no services during the year that would be considering something outside the scope of a regular audit. With respect to management representations, we will provide the letter to Jennifer today, dated today, and we'll ask that that's returned prior to us issuing the financial statements. We do have a couple of unrecorded items that I will go through with you. First being with respect to the municipality. This is something that was carried over from the prior year, and it had to do with the accrual of sick time. This year, the sick has been adjusted to the actual balance. So you will see in this area here under statement of financial position, there remains at this point no unrecorded balances on your statement of financial position. And the current year would have been adjusted by $126,000 had the adjustment been made in the prior year when it was identified. So there's no This would not be considered significant or material, and there's nothing that's carrying forward to the next fiscal year. On the water utility side, there were 2 items that were identified, both relating to accruals. One was with respect to a capital asset item, so an invoice that had been over accrued for at the end of the year. That is not unusual when you're dealing with large capital projects. The accrual is a best estimate at the end of the year, given the information that you have. And of course, we have the ability to look at that subsequent to the end of the year to see what that number ultimately ends up to be. So what you see is an over accrual of 30,000 on a capital item. And then the last piece would be the similar situation whereby the accrual of the debt charges was over accrued by 89,000. So in total, your liabilities are overstated by 119,000 in the water utility. Capital assets are overstated by 30,000, and the difference would be the adjustment to income had the debt charge over accrual not been made. The final piece that I would like to talk to is the management letter. We are required to address last year's issues, which is what you will see that we've done here. A couple of these items have been resolved, so I do want to highlight those items for you. The first item was discussed last year, tangible capital assets related to the calculation of amortization in SAP didn't match the calculation as determined by other records. This year it was adjusted for. There is nothing remains with respect to your tangible capital asset issue coming forward from last year. On Center 200, during the year, or during 18-19 year, there was investment made on the point of sale system, but was not able to be fully implemented before the end of last year. So some of that has happened, but in the current year, the inventory module had yet been to be implemented. There were some compatibility issues. So then you had to rely on manual inventory processes. So that was planning to be happening during the year. However, with COVID, it obviously pushed that back. There's some connectivity infrastructure that is now in place, and then we will be putting, or you will be putting that into use as soon as possible. Vacation and sick accruals, they remain to be manually produced. They're not calculated through the payroll system. They are manually produced. They have been adjusted to the current year. So there's been a deep dive into those items in the current year. However, what is missing at this point would be more of a secondary review of what's happened. So because it's manual, a secondary review would be very important here. So you are exploring alternative options for this to see what you can do and integrate into SAP if possible. The Port of Sydney remains outstanding with respect to the lease. The no formal agreement is been put in place. We recommend the development of the formal lease agreement or formal agreement to be put around the operations. And you can see your management's response is there. While no formal lease agreement is in place, the relationship is defined in the Articles of Incorporation. Council approves the port's operating budget and capital projects on an annual basis, performs ongoing monitoring of results, and enforces restrictions on the use of any surplus funds. The development of a formal lease agreement will be considered once new council is elected. And then finally, with respect to the water treatment costs, there still remains a number of projects that have to be done to meet the requirements of the federal government. And while a lot of progress has been made, obviously, we would recommend and encourage any areas that you can obtain some funding to be continued. And of course, as we know, a lot of work has been done, and management continues to look in any ways where they can find funding for those items. So that wraps up the audit side. I'd be open to any questions that that you may have on the audit of the municipality or the water utility.
Mr. Chair, Ian here. I'd like to ask Darren a question if I may.
Go ahead, Darren. Oh,
Thank,
Go ahead.
first of all, thanks, Mr. Chair. First of all, Darren, thank you very much for your presentation. Back in the spring when we did our planning session, we talked a little bit about with the pandemic and so on, looking at the estimates and bad debts. And I was looking at the taxes receivable and accounts receivable items and the estimates for allowances on the taxes receivables and the accounts receivables on the operating side. They're lower than I expected. And I know there's a number of reasons for that, depending on estimates taken in the past. And Jennifer talked earlier about enhanced collectability. So we've obviously got better at collecting. I'm just wondering if you could speak to that a little bit for us and tell us the overall view you saw when you looked at that and why you were comfortable with those numbers.
Well, with respect to with the taxes, and just give me a second, I just want to get that information. Obviously the revenue went up during the year, and the receivable has also gone up, so that's not unexpected. However, in relation, certainly there would be a higher percentage still outstanding than there would have been last year. The process around your abilities under the tax receivables would be different than sort of a general organization whereby you have different mechanisms to use in order to be able to collect on your taxes receivable, i.e. your tax sale abilities. So there's not necessarily the same direct effect on increased revenue as an increased receivable as there may be in a private enterprise. So we did talk about how your allowance was arrived at, and we were comfortable with the process that was performed by management, and that combined with the processes you have able at your disposal to address receivables, we were comfortable in what the number was proposed by management in your financial statements.
Okay, thanks, Darren. Just a quick follow-up. In terms of that procedure, is it, do you do analysis of the actual accounts, or is it a percentage of based on past history and so on? I'm just curious as to how the process works. That's all. Thank you.
We certainly would be focusing on large accounts with outstanding balances over, for a long period of time. That would be where our focus is. But generally speaking, the allowance is, we'll say, percentage based on aging of the receivables. So your management has information on how old those receivables are, and so that's really where the basis of your calculation comes from. Jennifer would probably be better to talk to the process of how you come up with the number. The audit piece is what we could comment on there.
Yeah, very good, Darren. Thank you. If Jennifer wouldn't mind, I wasn't sure where to ask this. I almost asked Jennifer, but I knew that you reviewed the estimates as well. So I took a shot at this end. But if Jennifer wouldn't mind giving a quick comment, just talking about how the process works, aging and so on. In light of the pandemic, I think it's important that we're comfortable with the amount there at the allowance and so on in these times. That's all. Thank you, please, and thank you.
Thanks, Ian. That's actually a really great question. Thank you for that. I do agree. Darren covered off much of what I would have said anyway by way of tools available to the municipality through tax sale procedures to enforce collection. When we're developing the allowance for uncollectible taxes, one area that we struggle with our outstanding accounts is any properties that may have been demolished where those charges are applied as a lien on the tax sale account. So it's more difficult to recover those demolition and cleanup costs through tax sale process, and we end up writing off a significant chunk of the balance, because the reality is that the total outstanding taxes far exceeds the value of the property by the time it goes to tax sale. So we focus a lot on those types of accounts that where we figure the arrears exceeds property value. And with the balance, it's we provide a general allowance based on a percentage basis.
Okay. Yep, that's good. Thank you very much.
Anybody else? Okay, hearing none. After Darren's presentation, we have in our agenda 4A, B, and C. We need a motion combining those three items. Can I get a motion from the floor?
I'll move it.
Thanks, Rakesh. Do we have a seconder?
Second.
Okay, was that George? Thanks, George. All in favor?
Aye.
Motion-
Aye.
Okay,
Aye.
thank you. Motion to adjourn. Yeah. So I think right now we'll go in camera. 5 minutes break first. Thank you.
So, Mr. Chair, just